Hey everyone, Justin Holland here with the Mad Insurance Show, making a difference in insurance. This is episode 22, and we're excited to have you here. We're going to talk about some news and updates regarding the industry to keep in mind. We'll talk about everything insurance, and we've got some key topics that we'll want to discuss today on the show. So I'm so thankful you're watching us either online or listening to us over the radio. Welcome to the show. The Mad Insurance Show basically is just here to help inform the audience, everybody out there listening, of all the insurance options, news, and details that you probably want to make sure you keep in touch with or updated on. And a lot of times we'll get a person call in after the show or even during the show and say, hey, listen, I've got questions regarding what you talked about, this life insurance or this health insurance or this employee benefits. Hey, Justin, we need a auto and home quote. Can you help us with that as well? So we welcome all those questions and the assistance that we can provide you. So without further ado, we'll kick off the show. But again, Justin Holland is my name. This is the Mad Insurance Show. I have a couple insurance agencies here in San Antonio servicing all of Texas and San Antonio and South Texas. Texas State Insurance Services is our health insurance brokerage, so to speak, that just really focuses on individual health insurance, health coverage options or alternatives out there where that might be a better fit for clients as far as cost wise, as well as short term medical, travel insurance. We do a lot of Medicare, tons of Medicare. So we're here to help you on all your Medicare options as well, dental, vision, and keep us in mind for employee benefits. We've been a great partner for small, medium, and large companies that are trying to strategize their employee benefits program. And I think we bring some stuff to the table that a lot of brokers might not. And we'd love to visit with you about that. You can reach out to us at Texas State Insurance Services at 210-880-5316, or you can visit us online at txstateinsurance.com. Also, Palmetto Life Group is a brokerage that I created, really focuses on, your life insurance, your long-term care planning, Social Security analysis. We help out with retirement as well where needed. And then we're really excited that we're just now finally getting up and running with our auto, home, and commercial lines of business umbrella policies. So we'd love to visit with you through our Palmetto Life Group channel, again, located here in San Antonio. The contact number for Palmetto Life Group is going to be 877-357-5316, or you can always visit us online at palmettolifegroup.com. Both companies, you can be able to fill out our contact form or just call us directly, and we'll, if we miss you for whatever reason, we'll reach back out to you and see how we can help you out. So that gives a little plug for our agencies here in town, and that basically complement me here at the Mad Insurance Show. Every couple weeks, or even last week, I'll have special guests on. We don't have anybody today. It's just going to be me talking about some updates and key topics. Hopefully, we'll have somebody on the show next week, and that way you can be anxious to visit and watch our show or listen to our show the next weekend. So let's talk about some of the trending news that's come up. Okay. And as we all know, we're facing rising healthcare costs, regulatory pressures for just agents and brokers like ourselves in this industry, as well as the carriers themselves. Insurance carriers are adjusting their benefits and networks. They're really taking stock in what's going on, specifically on Medicare, individual health insurance. It'll be interesting how this plays out into employee benefits, but the insurance carriers are making some big moves out there. And, the increased utilization of healthcare, the reimbursement that the government or CMS provides these insurance carriers, again, specifically on Medicare, are increasing. And I think we're going to see another, I wouldn't say a disruptive fall for Medicare open or annual enrollment periods, but I just think it's going to be interesting to see which carriers want to play ball in this industry and which do not. And that's going to come down to possibly seeing plans go away in specific markets. That could be rural markets, that could be, center city, major municipality markets as well. It's just, we just don't know. And I was in a training event with United Healthcare a few days ago, and they gave us some great updates and insight, and we'll probably see in the next month or so how that possibly looks for the carriers, and what their reimbursements would be, and kind of have, I guess, not know exactly what to expect, but have an idea of what could be coming. Because around this time every year, we kind of see, some news, and some of it or a lot of it comes to fruition the following year. So a lot of disruptions going on in the health insurance industry, and specifically, it's the rising costs for everybody. And we want to discuss that a little bit. Some articles that I wanted to basically bring up here on the show. One I found through the Harvard School of Public Health, and right off the bat, this caught my eye. Health insurance premiums are rising. Here's why. And they basically break down into the monthly health insurance bills are rising for many Americans. That's just something we talk about every time we're on the show here. And specifically, the ACA plans are seeing particularly high increases due to the expiration of the enhanced credits that were passed by Congress in 2021 to temporarily expand eligibility for lower health insurance premiums collectively for that middle class. That's the one where this really helped bring health insurance, specifically on the Affordable Care Act, Marketplace, Obamacare, whatever you want to call it, more reasonable and attainable for those families. And it's a big deal because, unfortunately, the expiration of these ACA enhanced subsidies is a significant blow. It was a blow to many of our clients here locally and around South Texas on their ability to afford their coverage and care. Estimates from the Kaiser Foundation suggest that on average, premiums on the ACA marketplace would nearly double compared to 2025. And that's what we saw. We saw, big dollar increases, and that income level that really got popped was the populations with incomes that are 400% above the federal poverty level. So let's just call it $60,000. These are the people that lost their subsidy altogether. Moreover, older people that are in that group that pay higher premiums, and the most impacted in the dollar, term, so to speak, of what their premiums look like. It's worth noting that lower income groups may be losing a smaller dollar subsidy, but those households may be less able to absorb an amount increased by that cost. Because let's face it, your credits or your subsidies are going to be based on your age, where you're located in some cases, and your income and your family size. What that tax dynamic looks like, because it is a tax credit that helps lower your insurance premiums. The government reported that 1.5 million fewer people have signed up for health insurance through the Affordable Care Act this year. That is not the whole story, because more people are likely to drop coverage in the coming months. I agree with that. I think we're going to see individuals. I just got an email from a longtime client, great people. And they're like, Justin, we just can't justify paying these premiums. We had many clients that would say, hey, listen, let's go ahead and keep this. Let's see if there's any relief, any legislation that comes up, that can help us offset these costs of insurance. And we're starting to see that. We're March 6th, so we're 3 months deep into the Affordable Care Act deadline for January 1st coverage, and we're starting to see individuals getting frustrated on those that stuck it out to continue paying those enormous health insurance premiums, okay, that they've been having to take on. So we're seeing that firsthand. That's why I like looking at these articles and discussing them on the show, is because it really, it reiterates what we're seeing here on the ground floor, in the trenches, with our clients, with our agency here at a local market. And we're seeing this resonate across the country. Is if a significant number of younger, healthier people drop out of these Affordable Care Act plans, the potential impact on the program is much broader than we expect. So the likelihood that younger, healthier people will disproportionately choose not to purchase health insurance, that's going to exponentially increase the exposure and claims for those that are sick and are entering that risk pool that could drive up that exposure. The worst in that process can spiral, known as a death spiral, is what they're talking about here, and lead to further disenrollment and higher premiums. I'm seeing that. We're going to see people disenroll from their individual marketplace plans strictly because of the cost. We've had some people that just missed their payments despite us sending notices to them and say, "Hey, you got to get this premium payment done. You're going to lose your coverage." That was one aspect of it, but another is just it's just going to be unaffordable for individuals to take that on. In addition, people on the ACA plans premiums for people on employer sponsored plans and Medicare are also going up. What, in your view, is the most important drivers of premium growth? And that was discussed in this article. During the last several years, the pace of healthcare spending growth in the U.S. has picked up, and this leads to higher premiums for everyone. Recent research has shown that prescription drugs, physician services, hospital care, in that order, are the most important drivers of cost increases for healthcare sessions and services. Moreover, increased utilization for some high cost diagnostics or therapies like skin substitutes used in wound care that can be heavily expensive on that, as opposed to price inflation, seems to be the most important factor in the past few years. While insurance pricing behavior accepts premiums as well, the data that we've seen suggests an increase in insurer profits don't seem to be driving the high level of premium growth we are seeing. So, again, a whole nother topic that I could go down on that. What policy options could help stabilize or reduce premiums without reducing access to care? This was a valid question on what I found online. Policy options can stabilize to reduce premiums while preserving a much healthcare access as possible, and need to be multiple pronged. There is no one solution, is what they're discussing here. As members of Congress have suggested, a way forward could be to restore subsidies for some period while developing a package of policies to address the underlying drivers of health spending. Let's pause there. The fact that they brought on members of Congress suggested a way forward could be restoring the subsidies. That would be a huge benefit for millions of Americans or those on the health coverage that could take advantage of those expanded subsidies for a little bit longer. I know that the government can flip a switch and allow a special enrollment period and help people, actually re-enroll into a plan. Maybe they didn't enroll because of the cost. Giving the public a special enrollment period, giving them some temporary subsidies again, will go a long way. It is not a long-term solution where it just that needs to be patched up right now. I'm hoping we see that come up. We're seeing a lot of stuff with Trump RX, the great healthcare plan, but there's no changes and there's no updates, and we're not seeing anything out there. I had Marnie Stelly with Zizzle Health last week regarding ICRA plans, and I think there needs to be legislation and tax credits heavily enforced on the ICRA option. That's basically where the employees can offer individual health insurance. Actually, not even offer individual health insurance, just offer a reimbursement arrangement so their valued employees can go purchase the insurance that fits their needs for themselves or their family members. Another policy proposal has been offered to for people vouchers for a few $1,000s. It could help them buy coverage. Listen, a few $1,000s, I just don't see that helping. I mentioned this on prior shows. The highest premium I saw was $3,900. Let's just call it $4,000 a month for a premium for a family of three. So let's remind everyone that is a $48,000 a month premium payment. Okay. And that doesn't include the deductible and the catastrophic out of pocket maximum that would need to be hit as well. God forbid something comes up. That's tremendous exposure. That is not affordable. And we need see some solutions there. So I'm hoping, we just got through election day a few days ago. Obviously, some shakeups going on there. We got world, wars going on, all kinds of crazy stuff. but we really need to focus on this healthcare situation, health insurance situation for people that really need it. So I'm an optimist. I'm hoping things will change there. We will see. Um, Another article that I wanted to bring up before we dive into some other options or discussions here on the show is going to be the why Americans are frustrated with the healthcare system. And this is basically an article that I found out. Smaller raise, higher healthcare costs may be to blame. And this was on News Nation. It was an article that they posted on March 5th, yesterday, actually. Recent surveys by the Federal Reserve Bank of New York suggest employers are responding to higher insurance costs by scaling back pay increases. The surveys of businesses in the New York, Northern New Jersey region found that employers' health insurance costs rose faster than other business expenses over the past year, with respondents reporting an average increase of more than 13%. This is a blip on the radar, everyone. This article coming up on those rising costs and how employers are having to scale things back because of the overhead that's slamming their bottom line to the company. 401k balances are up, but hardship withdrawals are raising. So businesses providing insurance to their workers indicated that absent these cost increases, would have raised wages roughly an additional percentage point. A single percentage point may not sound like much, but it amounts to roughly 20% drag on wage growth. Didn't realize that. That's important to know. Um, that is something we got to keep an eye on, and employers are absolutely feeling the stress of helping subsidize the cost of health insurance for their employees, and that's specifically for those employees that are actually offering an employee benefits plan. Why are Americans frustrated with the healthcare system? The average annual premium for employer sponsored family health insurance coverage was nearly $27,000 in 2025, up 26% from 2020. And that's another stat found on the Kaiser Family Foundation. Employees covered about 75% of premium, while workers contributed about 25%. Now, that's a little skewed there. Excuse me. The I don't see many employers right now covering 70% of the 75% of the premium for the employee and the family members. Typically, you'll see and there are generous companies out there that can cover 100% of the premium for the employee. Some of them will extend that to covering some of when you had a spouse, children, or family coverage, which is great, but I don't see a lot of it. Okay, I've been seeing that scale back. If you feel otherwise, let me know on the show. But I don't necessarily agree with employers cover 75% of the premium while workers contributed the other 25%, because that $27,000 for family coverage seems a little low, especially from what I've been seeing on the Affordable Care Act plans for families of 3, 4, and 5. But I digress. We'll see. A number of firms reported that they had an offset in at least some of the increased cost by reducing health insurance coverage to workers or by increasing employee contributions, the researchers wrote. Bottom line is what they're saying is we're seeing companies scale back from maybe being as generous as they have been on employer contributions to the health insurance or benefits that they offer, or it maybe even scaling back on taking care of that cost along with their employees and their family members. So as these costs increase, and I'm telling you right now, I feel that the group health insurance premiums are going to increase by these major carriers because they're losing money or scrambling from any losses or where they are profitability wise on other segments of the industry. Okay. You got United Healthcare, you got Humanas, you got the Molinas, um, Aetna's, Blue Cross Blue Shield. It's just going to be interesting on those carriers that play in the group benefits market, on where they're actually going to um, be competitively on the premiums for the small group and mid and large group health insurance plans. Let's see how this fall goes. So those are a couple of the news articles that I wanted to bring up, talk about in the show to kick things off. Again, you're listening to the Mad Insurance Show, making a difference in insurance. I'm your host, Justin Holland, with Texas State Insurance Services and Palmetto Life Group. The Mad Insurance Show is just a show we created here on the radio, here on KTSA 550 in San Antonio. We broadcast it on our YouTube channel. You can go to youtube.com /@ Mad Insurance Show. We'd love for you to follow us. I think I've got, 5, 8 followers now, and I'm playing the long game. So we'll see if I can get another 5 or 10 followers over the next year. But if you see us online, give us a like and follow. If you see some value into what we're providing, let us know. Reach out to us. We'd love to talk to you. But if you need help specifically on health insurance, employee benefits, dental or vision, travel insurance, or even Medicare, give us a call at our office, 210-880-5316, or you can visit us online at txstateinsurance.com. Don't forget, we've got Palmetto Life Group. That's where we focus specifically on life insurance, long-term care, Social Security assistance and reviews, which can be really confusing, and if you're not prepared for that, as well as auto, home, commercial lines of business. If you got any questions there, you give us a call at Palmetto Life Group at 877-357-5316, or you can visit us online at palmettolifegroup.com. So that gives us another little plug on the show. We're so glad that you're joining us. Let's talk about life insurance. Let's dive into that topic right now. We talked about some industry news going on. I love talking about life insurance. I think it's necessary. I think it's overlooked. I think a lot of people have it through their employers and not enough coverage personally. And I want to talk about life insurance and why that matters, and we'll dive into that. I got news for everybody out there. Okay, we ain't making it out of here alive. We got a 100% mortality rate, and a lot of us are going to hopefully make it to our 80s and 90s, and have a nice long life. But I myself, I've had some close calls. I've been in some bad car accidents to where it probably kind of could have gone another way. Thankfully, nothing health wise has come up, but you have to be prepared to make it a good day to die. Okay. And some people will cringe when I say that, but I think that's honest. I think we need to talk about it. Make sure you have your affairs in order, and coverage in place for your family, and make sure it's not just an employer sponsored, life insurance plan. I'm going to help a client out this afternoon after the show. Take a look at their health insurance, or not, I'm sorry, their Medicare insurance, but he also needs life insurance because he retired from the job, and he says, "Man, I've got a small final expense policy." And I told him, I reminded he got a kick out of it, that those final expense policies are ultimately going to get us in the dirt. Maybe have our funeral arrangements, but it's not going to add any other impact other than that cost if those arrangements aren't already are paid for or set aside for as well. But we want to make it a good day to die and have our life insurance in place, have a plan for our final expenses, how we want some of that legacy life insurance maybe to go to other family members, any debt that needs to be paid off, maybe go into a trust. There's a lot of ways that life insurance can come into play. And I've seen it firsthand help people significantly, when they needed it. A lot of people only ask about the life insurance when somebody's passed away. They hey, hopefully they had it. Can you tell me if there was any coverage? And unfortunately, we've had conversations where people didn't have it in place. In some cases they didn't qualify for it, but a lot of times we can get some type of coverage and protection in place for you regarding life insurance, and that's where Palmetto Life Group comes into play. But let's talk about where life insurance help protects families, and these are pretty obvious when we bring these topics up. But loss of income, mortgage obligations, maybe God forbid, something happens to a family member that contributes to the income and the livelihood of the family. There could be a mortgage that could very easily be paid off with a life insurance death benefit, and that allows that family to not have to worry about making a mortgage payment. And man, I've seen some high mortgage payments out there. That can be brutal on a family that loses an income stream with the loss of a loved one. Education expenses for children is another big one, business continuation needs, and debt obligations. So there's a lot of ways where life insurance we can create a buy sell agreement. We can help, if there's a key person to an employer or a company, and God forbid something happens to them, that could be detrimental to a company. Okay, and having life insurance in place on that is going to be huge. If God forbid those scenarios come up where it needs to be taken advantage, a death benefit needs to be taken advantage of. Common misconceptions that I wanted to bring out about life insurance is, you're too young. They're healthy. They don't need it. They have time later. I cannot tell you how many times I get a phone call and people are trying to get life insurance after they got a medical diagnosis um, that just hit them out of nowhere. Like, hey, I've got this going on. Can you help me with life insurance? A lot of times, or most of the time, the life insurance carriers are not going to want to take on a risk that is now known. Okay. That's why it's important. If you are young, if you are healthy, you don't need to postpone that time. The premiums and the way to get qualified are very reasonable to get yourself, or even if you listen to this and you maybe have some children in their 20s, 30s, and 40s, that's the time to try to get into a life insurance situation soon. And then there's also ways to have lifetime protection on that as well, and long term care planning protection, living benefits. And I'll talk about that here in just a minute as well. But the reality is, life insurance is typically most affordable when purchased and when you're younger and healthier. Waiting can limit on the increased cost of life insurance if you wait too long. So I think you need to have that conversation sooner than later, and we'd love to help you out with that conversation regarding life insurance. It's not just about replacing income; it can be a big part for a larger financial strategy of any family or business, and protects the long-term stability for the insured and what you need to make sure is covered and taken care of. Um, you are listening to the Mad Insurance Show, making a difference in insurance. I'm your host, Justin Holland. We're so thankful that you're here listening to the show, either online or over the radio waves. So thank you for joining us today. We're talking about life insurance right now on the show. Remember, the Mad Insurance Show is everything insurance. We talk about all types of topics every week to try to bring value and awareness to our listeners, our trusted clients, and soon to be clients that are listening to us online or on the show. If you have any questions from what we've discussed here, remember Texas State Insurance Services, everything health insurance, employee benefits, and a lot of Medicare questions come in to us there. 210-880-5316, or you can find us online at txstateinsurance.com. And Palmetto Life Group is going to be here to help you out regarding life insurance, long term care, Social Security analysis, auto, home, and commercial lines as well, umbrella policies. That number's 877-357-5316, or visit us at palmettolifegroup.com. So let's talk about life insurance with living benefits. I think modern life insurance policies have evolved significantly over the past 10 plus years, and it's important to remind individuals about living benefits. A lot of people think life insurance, hey, it's got a death benefit, God forbid there's an untimely death. Absolutely correct. And a lot of policies have like a terminal illness rider. And that means if you are being diagnosed with a terminal illness, let's say you got 12 months, 24 months to live, so to speak, these insurance carriers will allow you to execute the death benefit knowing that you've got limited time and the prognosis is there's going to be a death sooner than later. And that can come in very handy there. So that terminal illness rider is what you commonly see on a lot of insurance out there. So if you got a terminal condition, they're able to access the portion of the benefit. But a lot of times people don't realize that critical illness, chronic illness, is going to be complemented on that. Alzheimer's is as well, going to be, and this is specific to carriers, but this is important to know because you might have a family member or gone through a loved one, a neighbor, a friend, or a family member that has had a long-term care situation come up. I will tell you, it is a very sobering experience for most individuals out there when you're caring for somebody in a long-term care capacity. It takes time, it takes money, okay, and effort. It takes, you know, time off from work, from family. The emotional strain that that can cause can be very serious. And I passionately plead with everybody that I talk to, hey, really consider a life insurance policy that has living benefits that we offer. A lot of times, sometimes it makes sense, for a standalone long-term care policy. They're not cheap. The sooner you get that, the better, where you can lock in those rates. But if you have the means, long-term care is going to be a big situation and needed for not just the boomers, but it's that Generation X. I'm in that boat. Okay, I'm 47 years old. I've got plans in place to help us protect us. God forbid, there's a long term care need in the future or immediately. Okay. Anybody can come down with a chronic illness or a critical illness, so that's not necessarily subject to our 70s, 80s, and 90s or even 60s. Critical illnesses, let's talk about that a little bit. We're talking a heart attack, stroke, cancer, maybe a major organ failure. Those are items that a lot of insurance plans or life insurance specifically don't cover. And that can be a huge relief if you've got those living benefits baked in, so to speak, to your life insurance. And a lot of people probably listening or watching us online have a term life insurance policy or an older policy or maybe just a small final expense policy. Reach out to us. Let's assess that current policy. There's a good chance you probably keep that one, but get something with living benefits that actually complements that life insurance policy that you have in place. What's nice about this is these are personal policies that we will help you out with. Sure, we can help out with employee benefits life insurance where, you've got that coverage for those trusted employees, but a lot of times it's just not enough. And what's cool about having personal life insurance is it's portable. If you're a contract labor and not offered life insurance at all, you've got that peace of mind that that policy is going to be available to you. If you leave a job or a position, you're not having to worry about trying to convert that life insurance policy. Not everybody or not every carrier does that. So it gives you that peace of mind of having a constant life insurance policy in place. One of our trusted carriers also allows us to convert their term policies. Maybe you got a 10, 15, 20-year term policy, and you're like, you know what, Justin, I'd really like to have that for my entire life. What can we do with that? With some of our carriers, you're locked in to the rate or the qualification you got from years ago. And what's cool about that is, say, maybe there's some medical conditions that have come up that could possibly make you uninsurable. Being able to convert your term life insurance that eventually will, go away into a permanent one could be a great strategy on playing the long game. God forbid something comes up, and absolutely on a life insurance policy with the living benefits that protects you from the not just the terminal illness, but the chronic illness, critical injury, and critical illness situations. This is going to benefit any family having this type of coverage in place with medical expenses, the loss of the income that can be suffered on that, household cost, and I just brought up the long term care, the caregiving needs, which can be devastating for families and be a complete disruption for everybody that's needing that coverage. So that gives us a good look into life insurance and what we can do there. Actually, you know what? I brought with me um, the details on some of the life insurance with living benefits. Basically, they're called accelerated benefit riders that are optional in some cases, or they're baked in and included into the life insurance. But terminal illness or terminal illness a rider on this particular policy allows for payment of a portion of an insured's death benefit on a discounted basis if the insured has an illness or chronic condition that can reasonably be expected to result in death within 24 months. Some carriers don't go 24 months out. You got to have 12 months out or 18 months. On one of our particular carriers, they'll allow that terminal illness rider to be executed and enforced on 24 months out, which is great. That's a value add on that. Chronic illness or chronic illness and covered chronic illness riders allow for a payment of a portion of an insured's death benefit on a discounted basis, again, discounted basis, if the insured is chronically ill. A chronic illness is defined as one that leaves you unable to perform um, unable to perform without substantial assistance 2 out of the 6 normal activities of daily living for a period. And, you've got to be able to not be able to handle those 2 out of the 6 for at least 90 days due to the loss of functionality and capacity, or require substantial supervision to protect oneself from threats to health and safety due to severe cognitive impairment. These 6 activities of daily living include bathing, continence, dressing, eating, toileting, and transferring. There is no additional premium for these riders on most of these plans. So that's huge. So just let's recap that again. A chronic illness is defined as one that leaves you unable to perform without substantial assistance 2 of the 6 normal activities of daily living for a period of at least 90 days due to the loss of functionality and capacity. Now, as a reminder, the 6 activities of daily living that basically trigger this benefit is going to be not being able to bathe, continence, dressing, eating, toileting, and transferring. Okay, that gives you a good idea on where that chronic illness can come in and play a huge part. God forbid that comes up. And maybe those situations don't resonate with you, but maybe they do. Maybe you're watching this video or listening to this online. You're like, hey, Justin, I have had to deal with that with a family member and a loved one. I want to make sure we're protected. Give us a call and we'll help you out with that. What's also cool is some of these carriers will help out with Alzheimer's disease and Lewy body dementia. So, on one particular carrier, Alzheimer's disease rider follows for payment of a portion of the insured's death benefit on a discounted basis. Once again, if the insured has a qualifying diagnosis of Alzheimer's disease or Lewy body dementia. There is no additional premium for this rider on this particular plan. So that is huge too. If you've ever had to deal with an Alzheimer's situation or witnessed that, it can be tough. And having this a part of your life insurance strategy and long-term care strategy for living benefits could be a game changer and really help you or a family member or loved one or valued employees with that protection. Let's talk about critical illness and critical injury a little bit more detail as relates to life insurance. The critical illness and critical injury riders allow the payment of a portion of an insured's death benefit on a discounted basis, again, discounted basis, if the insured is critically ill or critically injured. Okay. Covered critical illnesses, and I'm going to read this off because there's a handful of them. Let's talk about this. ALS, Lou Gehrig's disease, aortic graft surgery is another trigger there, aplastic anemia, blindness, cancer, cystic fibrosis, end-stage renal failure, heart attack, heart valve replacement, major organ transplant, motor neuron disease, stroke, or sudden cardiac arrest. So that gives you an idea of critical illnesses that could trigger that life insurance benefit for you. Let's give you some examples of critical injuries. This could be coma. This could be paralysis. Another one is severe burns, traumatic brain injury. And in California, critical injury availability is limited. So you want to check the state specifics of the plans and options out there for your life insurance. But I'm a big advocate of that, and we'd love to help you out with a life insurance review, long-term planning review, and that's where Palmetto Life Group comes in to play. Our Palmetto Life Group division handles life insurance, long-term care planning, or long-term care plans, Social Security analysis, along with the auto, home, and commercial lines. You can reach out to us at 877-357-5316 or visit us online at palmettolifegroup.com, and we'd be happy to take a look at the life insurance options for you whenever you're ready or need it. So that talks about the life insurance details that I wanted to bring up, which I think are very important. Let's dive into some health insurance details and something I want to discuss. What we're going to discuss real quick before I go into health coverage options is Medicare. We are helping a lot of people out with Medicare options right now, and we've got great, trainings that we can help out with one-on-one visits, whether it be video, online videos, in person. We're helping out a lot of employers with Medicare and Social Security reviews for their valued employees. Took care of a metal company here in town this week, and a lot of people need assistance with that. And I will tell you, it's time consuming and confusing. And a lot of agents don't want to spend or waste the time on some of the, past that it takes to get your Medicare taken care of, or contact the Social Security Administration. They're getting bills. They don't know why they're getting these costs enforced on them for their Medicare because they don't know. And the Social Security office is doing the best they can to educate everybody out there. But that's where an agent broker comes in and says, hey, this is what you have to work with, whether it relates to an employer sponsored plan or Medicare. A lot of people, I mean, just today, probably had 4 individuals that I met with regarding Medicare. They didn't realize there was a cost to it until it was too late. They enrolled, they got their Social Security check, or they're getting engaged with Social Security, which is totally different than your Medicare benefit, and it's a lot. So just know that you can reach out to us at Texas State Insurance Services for that assistance regarding Medicare. It could be for yourself, it could be for a family member, it could be for your valued employees. We will sit down, assess what's in place now or what needs to be prepared for with aging into Medicare. More individuals every day are aging into Medicare, and we're here to help you with that. And we're playing the long game, guys. We're here to help you now and into the future. We're hoping that you're going to be your agent for many years to come. And if you've got questions on that, visit us online at txstateinsurance.com, or you can call us directly at 210-880-5316. And just remember, I don't think I've brought this up yet on today's show. We've got 4 locations where we can meet you at in the San Antonio area. We also got one in McAllen, servicing the Rio Grande Valley. But make no mistake, we can help you statewide within anything insurance, whether it be health insurance, employee benefits, life, auto, and commercial lines. So when we do our Medicare reviews, we do an intake form, we get a questionnaire completed, and that helps us really help you size up quickly what you'd be looking at as far as Medicare options. You want to visit sooner than later, okay? Because when you age into Medicare, a lot of people don't realize there's time constraints here. There's enough mail that goes out to people when they are becoming Medicare eligible. These insurance companies have all the data on us, and they absolutely are going to target you for mailers. And there's a lot of noise out there, and it's not just mailers. It's online ads, it's TV advertisements, it's constant phone calls that my clients get all the time saying, "Hey, we've got a better plan for you. You need to talk to us about your Medicare." Just be cautious with that, please. And we're doing the best we can to educate our current clients that we've had over the years and new ones, and just let them know we are a broker. We have access to all the carriers and plan options in most cases for the consumer, and we want to help you size that up. Don't get me wrong, there are some plans that could become more attractive or better for you, and we'll help you size that up and take a look at that. But sometimes what I've seen is people get switched into the wrong plan and don't realize the exposure, or they might get a bigger dental benefit over here. That's great, but they lose out on a copay or other assistance they were getting on a particular plan that they already have. So that's why we want to make sure that we are proactive with everybody on having the right plan in place and doing a review, especially ahead of schedule. Annual enrollment period for Medicare is going to be October 15th through December 7th. But, we can look at Medicare supplement plans and conversions to that year round. We were reminded of that again a few days ago with our meeting with United Healthcare. A Medicare medical supplement can be enrolled in, granted you pass underwriting or look at the underwriting situation anytime during the year. So just know that we're here to help you look at a complete review and assess if you might have access to better coverage and care. Sometimes it just makes sense to stay put, but we'll be here to help you out with that. I just spoke about life insurance. We spoke about Medicare a little bit. We've discussed some of the news articles that have come out and the alerts regarding the health insurance costs out there. What I want to close out the show on is talking about some health coverage options that are available year round. And I'm specifically going to focus on the situation where maybe you missed the Affordable Care Act open enrollment deadline, or maybe you didn't miss that open enrollment deadline, but the cost of the health insurance was just going to be out of reach. It was too expensive. So this is specifically going to be everybody under 65 years old that needs coverage in a plan for themselves and or their family members. And health coverage is huge, having access to have something year round, because a lot of times up until we had this another alternative that we can help you quote, it was just a short-term medical plan, which is basically going to be 4 months. They give you 3 months and then they can add a renewal month on the fourth month. Well, that's great for 4 months if that's all you need. Typically, most individuals want that through the rest of the year or possibly a little bit longer until they have access to maybe an employer sponsored health insurance plan. Short term medical is a great bridge for that, but a lot of times it's not enough. So, one of the most common misconceptions about health insurance is people can enroll only during open enrollment. And that is true if you're looking at the Affordable Care Act plans or trying to get a subsidized plan. That has gone away, that window there, unless Congress or our legislatures fix that and allow a special enrollment period. But, the common year-round coverage opportunities are going to be special enrollments. And typically that's going to be a loss of employer coverage, marriage or divorce, birth and adoption of a child, moving to a new coverage area if you had coverage in place already. But what I wanted to do was discuss, a plan that we've got that basically bundles sickness and an accident policy as an option, and it has an optional wellness policy that can allow you to have much more affordable coverage in place for your family. It's not super cheap, but it's not super expensive either. It's really meeting you in the middle there. It's built on a national network. It offers flexible out of pocket maximums to provide the right level of protection while you're staying true to your values. The Fortress plan comes with pharmacy, maternity care, emergency care services, and more. Each plan level and there's different levels on what the maximum limit you want to have as far as your exposure. But what's nice about it, every level has access to preventative and wellness care, which is nice. You might want to get your annual physical done and your annual visits done. That's baked into these policies. You can actually have it off and help lower the premium of the plan if that's not important to you. But I think having a wellness visit baked into the plan is something that you want to consider. These policies do not provide major medical insurance coverage, and they're neither minimal essential coverage, a MEC plan. If you're an employer sponsored plan administrator, you know what I'm talking about there. Under federal law, nor workman's compensation insurance under state law. The policies that we're talking about are going to provide accident and sickness coverage with the optional wellness add on. That's it. Okay. The policies pay in addition to any other enforced coverage if insureds do not have minimal essential coverage under the federal law. An additional payment with their taxes may be required under federal law. So let's dive in to some of the foundation that's on this health coverage plan. And right off the bat, it's zero deductible plans. All right. What that means is first dollar benefits, no deductibles with transparent coinsurance. So you know what your value is every time. And there's no, you know what your exposure is with no deductible. Okay. Because a lot of times you got to meet a deductible and then the company's going to come in and help provide coverage and care. Not having that deductible will help clear those lines. The MOOP rollover. So half of the satisfied maximum out of pocket rolls over at renewal. So you have a maximum limit on these policies. Okay. What's nice of that is if you didn't have any claims, half of that will roll over to the following year. That's a pretty cool trick, so to speak, on the coverage and option that they have. There's no policy maximums. Accident and sickness policies provide financial protection with no limit of maximum policy benefits. That's another huge advantage here because a lot of times you're maxed, whether it be 50,000, 100,000, half a million, they will max you out on this. These policy options do not do that. So might be important for us to help you get a quote on this just with that alone. 24/7 virtual care. You've got 24/7 access to a virtual primary care and urgent care services that are included in this plan and health coverage. Real insurance, really, not a healthcare sharing ministry program. It's 100% licensed health insurance, 100% Christian values. So I like that. There's some of the individuals out there were leery on these sharing ministry plans. I get it. This is not that. This is an alternative. Nationwide network, convenient access to more than 993,000 providers across 5,700 hospitals in the first healthcare network. That's huge. So you've got a robust network that you can access with this coverage as well. Pharmacy benefits, drug costs are fully integrated into the out-of-pocket maximums. Now, that's going to be your basic pharmacy benefits. If you're taking some high-tier medications, some injectables, insulins, you're going to have some exposure on that cost. If you're taking some of those high tier medications, those could be because of a health condition that you have that might disqualify you from qualifying from the plan. But again, we've got a complete questionnaire to see if this is going to be an option for you. That is a couple of the core foundations of the plan. I will tell you the plans come with zero deductibles. I want to reiterate that. They've got co-insurance percentages of 50%. So you're going to have some co-insurance to access within the plan. And ultimately, you've got sickness and you've got accident coverage within these plans. God forbid any of those situations come up. But if you'd like a quote on that, let us know. We've got a health coverage option. Just to reiterate, I went over some of the details on it right now. But if your health insurance is just too expensive, you weren't able to afford the Affordable Care Act plans that were offered for this year's renewal, maybe your employer-sponsored plan is too expensive. We will help you size that up, take a look at a complete quote, and see if these health coverage options and alternatives are going to provide some savings. Had a phone call early this morning with a longtime client, and their marketplace plan, it bumped up to almost $800 a month. I looked at these health coverage options and we're at a couple $100s. And he's like, hey, that is something affordable. It's like, you taking any high tier medications? I think this particular client was taking a statin. Not a big deal. Those are a few dollars to fill at the pharmacy. And he's got peace of mind that he's got great coverage to protect him in accident and sickness. And that's going a long way for him and his family, especially with the fact that they had a newborn on the way that's going to need to be covered as well. So I cannot thank you enough for joining us here on the Mad Insurance Show, making a difference in insurance. Today's episode was number 22. I'm your host, Justin Holland. And don't forget, reach out to us at Texas State Insurance Services for any of your health insurance needs, whether it be individual, Medicare, employee benefits, travel insurance, and as well as dental and vision where needed as well. The phone number for us there is 210-880-5316, or visit us online at txstateinsurance.com. And don't forget Palmetto Life Group for all of your life insurance, long-term care, Social Security analysis reviews, as well as auto, home, commercial, and umbrella lines of business. That number is 877-357-5316, or visit us at palmettolifegroup.com. We'd love to help you by either calling us or just contacting us through our contact form on our website. If you have any questions, please reach out to both companies. Again, thanks for visiting us here or joining us on today's show, the Mad Insurance Show, Making a Difference in Insurance. I'm your host, Justin Holland, signing off. You guys have a great weekend, everybody. Take care.